This is our Forex blog for June 27th, 2013, and I'd like to showcase, we have had currency indexes in the software for probably maybe 3 months now, but one of the things that we're working on is actually building it right into the data feed so that it loads as if it's a regular chart, and that means that you can just simply add any of our regular indicators such as the containment bands right to the chart. And the containment bands show you the hourly moving average and very high probability reversal areas, especially the 2.0 white band. Let me just move this up here. So by having regular indicators on the chart and also being able to set alerts that will also now work, you can have it play a sound. What this is going to allow you to do is a lot of times the market's just chopping around, going sideways. If you have a bunch of currencies doing nothing, you don't want to be watching the charts. But if you put a trend line on here with an alert, you can be notified when things start to move. For instance, that trend line and maybe went over the high here. You don't have to sit there and watch it. You can have them sent to your cell phone, email, or if you're there in the same room or house, you can have the audio alerts turned on. And these with the script I had never worked because it was just I calculate all these manually. Now we build it into the data feed. So that being said, that's some things that are coming in the future. You can also use a bunch of other indicators that you could never do before, and you can use your own settings, own variables, whatever you want, such as the trend candles. You can use these on the chart and use it as a timing tool for trends, especially at the beginning of trends. You see them move up, it pulls back, goes green, you get in, you're in, you're in, trading with the trend. But what I like to do is show you, it's so dead right now, I wanted to show you how when this gets hit, it actually triggers the alert now, whereas before it never did. But the market's dead and may not do that right now. So I'm going to take the trend candles off, and I'm going to show you how to use this tool to find high probability trade. One other thing that's new, because it is built into the data feed, like I said, all of our indicators work, including the daily pivots. Those are a great way of knowing high probability places to get into trades. Typically underneath the pivot, you want to look for sells. Above it, you want to look for buys. Same thing here with the hourly moving average. You don't really have confirmation of an uptrend until it breaks out from below to above the hourly, and especially above the pivot. Once it does that, it's likely to go to the next pivot area. And you can use these areas for, like I've always said in the blogs about this, anticipatory trading. In other words, this was a resistance area, it broke out, comes down, finds support right here. Very high probability place to get in. And this is a good profit target, which you can see also was resistance. It happened to be at our upper containment band as well. And when you see two currencies that are both at support or resistance, here's the dollar. Let's look at this today. Obviously, if the dollar's strong and the euro's strong, you don't want to be doing anything. Let's scroll forward here. You can see kind of both of them are going up. The dollar pulled back a little earlier today and then went from below its hourly to above, below the daily pivot to above. These are pretty decent places, high probability places to get into trades, especially this one because it found support here, broke back above the hourly. You can put your stop right here. Super tight stop, and you can see the dollar index just exploded up. And anytime you see any currency index make new highs for the day, the first pullback is also a very high probability trade. So this one would have produced a little bit of profits, this one big profits, and this one big profits. And basically you want to trade it against whatever's weak at the time. So we'll just go through the pairs and find one that's weak at the time. Here you can clearly see that this one's weak. In fact, the pound is underneath its S1 pivot level, which is extremely weak. The only downside of this is that the 2.0 containment band typically is a reversal area. Now the only good news is the one I put on here is not our DSP one. The DSP one is much faster and it tends to be a little bit farther away. As I click that DSP line here, it's probably going to get wider. In fact, you can see it's much wider. These are the ones I actually use to trade with. So this is an area where it's likely to find support and reverse. So that being said, if you find one currency that's strong, like the dollar, and it's really confirmed strong once it's above, both the pivot, the hourly moving average, and these pivots are new now. So you have, an entry here and here. This one, obviously is trending down. It's at a support area. If this starts to break out, you can take a shot at it. If the pound kind of stays, below the trend line off the highs here, you stick with it. That one obviously didn't generate much profit. The second one here at 10 is exploding up. This one, for about 10 minutes, it's going up, and then it breaks the trend line. And when that happens, it's just a very high probability trade. Comes down. This is a likely reversal area, so later part of 10 o'clock, you might want to avoid trading the pound dollar. They both actually shot up going into 11, so you would much rather be trading the pound versus one that's going down, the dollar versus what's going up. But earlier, there were some great trades there. And you can use tick charts, range charts, anything that you want for the actual entry. So let's take a look at the pound dollar, from 7 o'clock to 10:30. From 7 o'clock to 10:30, as predicted by the currency index, you have a very strong downtrend. And remember, when both of them are going up from about 10:40 to 11, you really had a slightly down move here, and mainly because the dollar was going up faster than the pound was. But you never want to trade two currencies are going up or two currencies are going down. You're going to get into some pretty much sideways action. So once you identify the pound was weak, the dollar's strong, especially a little bit later when, let's move this out of the way for a second, especially a little bit later when, right at 10 o'clock, this one just exploded up. And the pound was trending down all day. That is a phenomenal trade to be getting into. You have a nice little beautiful trade here in the pound dollar pullback trade. I would bet that if you put our perfect oscillator on this, which is one of my favorite tools, and it may not be in this actual yeah, here it is. Perfect oscillator. If you put this on here, oftentimes when you see a downtrend like this and the chart is at or above the upper Bollinger Band, it's a very high probability place to sell. And you can see that that's the case here. So probability wise, it was very likely to reverse because the trend was down, and it did. And you can see it fell from around 60 down to about 10 or maybe even 5,200. Regardless, you made over 40 pips here, and your risk is this. And even if you got out when it went sideways right here, you can see you made about 1.5 to 2 times more profit than what your risk is. And that's really the key to trading. There's nothing more important in trading than having small losses. Even if it's small loss, break even, small loss, then you get a big win. That's the key to trading. So let's take a look at some other trades from 8 to 11 when the dollar was really strong. Very high probability trend is up. Let's see what the Australian's doing. All right, so this one's kind of nice because it's got a double top right here. And it's also got kind of a trend line that got broke. It was a false breakout. Typically when trend lines are broken, a lot of times they do go back up and test the highs, and when they fall again, you're in for a very high probability down move. Unfortunately, at 11 o'clock, this one's already at a likely reversal area. So I would not trade the dollar versus the Australian. Let's take a look at the Swiss. This one's kind of just slowly going up. Again, you're better off finding one currency that's strong, one that's weak, and trading that one. So this is a much better opportunity. The only downside here is, while it's underneath its hourly moving average, it is not underneath the pivot, because the pivot's underneath this. These green lines are above the pivot, as you can see. And notice how it acts as support level and possible area to get out of a trend trade. But a little bit around 9, a little bit after 10, both of these are exploding up. This one isn't a downtrend. You're very likely from 9 to 10:30 to have a dollar CAD trade that's exploding up. So here's 9 to 10. And basically, there's two methods of getting into trades. One is kind of on pullbacks. You might have even got into this pullback with a loss. This pullback, you made 20 pips. This pullback, you made 20 pips. You also have Fibonacci areas that kind of predict what the next profit target is. From this swing here, notice the first fib target acted as resistance area for about 50 minutes before it finally broke out. Let's see how the New Zealand did. You really want to find one that's just going down against everything. Unfortunately, this one was above its hourly before, double topped right here, and has a 1, 2, 3 reversal sell pattern right here. Let's kind of zoom out a little bit. One thing that you can do also to anticipate trend direction reversals is draw your fibs on there, and at these fib targets, especially when at their upper containment bands, these are areas where it's likely, very high probability to reverse. So let's line these up a little bit more. At 8, you can see this was overextended. Now this trend was kind of on a pullback. This one had gone up too much. This one kind of was trending up over the last 2 hours and pulled back. It also looks like it was kind of right near maybe a 50% retracement of this move. Actually, it retraced to the 62% fib and didn't go underneath it, which is always a good sign of the trend continuing. Notice this fib target where the market reversed at. So, you really want to obey these fib areas. This fib target got hit and it pulled back. This fib target got hit. So some days trading is just so ridiculously easy. Like if the dollar's strong like this, you'll have 2 or 3 currencies that are super weak, and you buy the dollar versus those other super weak currencies, and you'll find 30 to 50 pip moves. Today, when this was lining up to go up, a lot of other currencies were already extended. Are they going to continue trending up even though they're up too much and at a likely reversal area, or reverse? You don't know. But if you're watching this live, let's move them both back at the same time. And let's make them both the same color, so when I move one, you can see the other. When you spot, a big move in one currency and the other one's coming the opposite direction, remember, this is at the fib target from the previous swing. It's also kind of double topped here. The dollar just exploding up right here. Boom, this one's exploding down. Somewhere in this bar at 10 o'clock exactly, you're getting into a New Zealand dollar sell. And as you can see, even if you miss that first trade at 10, look at some of the patterns on here. 1, this is at a likely reversal area. Anytime the perfect oscillator hits plus 80 or minus 80, it tends to reverse. You can see in this case it slowly went down a little bit and then went sideways. In this case it did reverse. In this case it kind of went sideways for about 40 minutes. Most times that these get hit, you either get a reversal or it goes sideways. Notice this extreme here, market pullback. You will find that this is on most days 70 or 80% accurate. So even before that 10 o'clock, you were kind of expecting a reversal. And if you miss that first trade, you have a nice pullback. This was the previous swing low. It went 20 pips underneath there, and then you got a pullback. And anytime you get a pullback to where a previous swing is, that's a very high probability trade. In fact, I have trading systems that just look for this pattern and take that trade. Because some traders are stuck in longs here, right? And if they didn't get out of their trade up here, at this point they're losing money. When it comes back to break even, they tend to exit their trade. So there's a lot of sell orders there. If price gets back, these guys who bought here are lucky enough to get out of break even and not lose much. So that's why that pattern works. It's kind of common sense. And when you see people stuck in losing positions, when you have sharp reversals like that, very high probability. The only thing that would have made this higher probability is when the perfect oscillator came up and hit the upper band here, which it didn't. Most of the time when you have a downtrend and you got a decent pullback and it hits the upper band, that's a great place to sell.